Most Nigerians invest in Stanbic IBTC mutual funds, but only a few actually make money from them. And it's not because Stanbic is bad, it's because most people enter with the wrong expectation, the wrong fund, and the wrong timeline. Some people put their money in a money market fund and expect stock market returns. Some withdraw too early, some ignore inflation, taxes, and fees. And most people don't even know how these funds actually make money investing randomly. But that ends today because in this video, I'm going to show you clearly and practically how Stanbic IBTC mutual funds really work, how to choose the right fund for your income level and your goals, and how to use them to actually build wealth and not lose value slowly without knowing. Hello, my colleagues, welcome back to the channel. And if you are new here, you're absolutely welcome to this breakdown. We are going to be going deep, we are going to be practical and different from what you have ever seen before. By the end of this video, you know and understand exactly which Stanbic fund fits you, how to check your real return, and how to avoid the mistakes that makes most people think that mutual funds don't work. But before we dive in, please do me one quick favor. Please smash the like button so this video can reach more people who need clarity around this topic. Subscribe to the channel if you haven't already, and you can as well join my WhatsApp channel using the link in the description and pinned comment. That's where I share my market research, what I'm investing in real time. And without much talk, let's jump right into today's video. Let's go. Before we break down the different fund, you need to understand why Stanbic IBTC mutual funds are such a big deal. You see, Stanbic isn't a small asset manager that disappears after 2 years. They are one of the biggest and most respected asset managers in Nigeria. Regulated, audited, trusted, and managing billions, if not trillions, for both individuals and institutions. They offer both Naira funds and dollar funds. So whether you want passive income, stability, or protection from devaluation, there's something for you inside the Stanbic ecosystem. But here's the most important part. Stanbic is safe, but safe does not automatically mean profitable. A low risk fund can still lose value to inflation, and a secure fund can still produce returns that don't match your goals. That's why understanding each fund is important, because once you know how they are structured, you know exactly which one fits your time horizon, your personality, and your income level. All right, now that we have laid the foundation, let's talk about the biggest lie Nigerians believe about mutual funds. The biggest lie Nigerians believe about mutual funds is simple. People think mutual funds are designed to make them quick money, but that's not what these products were built for. Mutual funds are stability tools, they are income tools, they are protection tools, they are not get rich in 12 months kind of tool. And the moment your expectation doesn't match the product, disappointment begins. Because here's the truth nobody really says. If you want aggressive growth, some Stanbic funds will frustrate you. If you want safety, some Stanbic funds will stress you. And if you choose the wrong fund for your goals, your experience will be worse than if you didn't invest at all. Most people lose money in mutual funds not because the fund is bad, but because they entered with the wrong mindset. Put money in a money market fund expecting stock market kind of returns. They choose a dollar fund but expect Naira level growth. They pick an equity fund but panic after 3 months of volatility. And then they conclude, oh, mutual fund does not work. No, the fund is working exactly as designed, guys. It's just that the investor who selected picked the wrong tool for the job. Now let's break down the 5 major types of Stanbic IBTC mutual funds so you can stop guessing and start choosing with strategy. Let's start with the simplest one, the Stanbic Money Market Fund, MMF. This is the fund almost everybody runs to, and for good reasons. It's safe, it's stable, and you can access your money quickly. The purpose of the money market fund is simple: safety and liquidity. This is where you keep money you might be needing soon. It's perfect for emergency saving, perfect for school fees, saving your rent, short-term business cash. Perfect for, let me just park this money somewhere safe. But please hear this clearly, very clearly, guys. This fund will not make you rich. It's not a growth fund. It's not a protection fund. Most times after inflation, your real return is still negative. So if you enter the money market fund expecting stock market returns, you'll be very, very much disappointed. I want you to think of this as your pack money here and sleep well at night kind of fund. It invests mostly entirely in treasury bills and commercial papers. Current returns in Nigeria are around 16 to 18% per year. But if inflation is around 16%, so it means that your real money is not really appreciating. It's kind of shrinking a little bit as inflation drops. This is a defense fund, not a wealth building fund. Next, we have the Stanbic Bond Fund. The bond fund is for investors who want income but still want lower risk. It invests mostly in FGM bonds and corporate bonds, so it pays better than the money market fund, but it is still far more stable than the stock market. This fund is ideal if your time horizon is around 2 to 5 years. Returns usually fall between 12% and 18% depending on interest rates. This is your I want stability, but I still want better growth than the savings account or fixed deposit fund. You can top up monthly for this fund and you can withdraw anytime. There is no lockup for you. Your only job is to give it time to do its work for you. The third fund we have is the Stanbic Balanced Fund. Now, this one is the most underrated fund in Nigeria, the Balanced Fund. It mixes stocks and bond, which means you get moderate growth but still have protection when markets are down. It shines when your mindset is 3 to 10 years. Returns range between 12% and 25% depending on the market cycle. It could be higher. It doesn't grow as slowly as a bond fund, and it doesn't crash as hard as an equity fund. This is the best of both world funds. If you want real growth but still want some safety, this is one of the best choices Stanbic IBTC mutual fund offers. The fourth fund we have is the Stanbic Equity Fund. This is the engine for long-term wealth builders. If you want serious growth, this is where it happens, but it's not for the faint-hearted. The equity fund invests mostly in stocks. This means higher potential returns and high short-term volatility. Returns can range from 15% to 35% over a long period, but you must be ready for red weeks, red months, and sometimes even red years. If you panic easily, please, this is not for you. If you're the kind of person that checks your balance every day, if you can't handle temporary losses, don't enter this fund. The recommended mindset for those that might be investing in this fund is those that have mindset of 5 to 15 years. Not because your money is locked. It's not. You can withdraw your money anytime you want, but because that's how long it takes for the stock market to truly reward you. If you can be patient, this is your long-term friend. Finally, we have the Stanbic Dollar Fund. This is the one many Nigerians underestimate. The goal here is not massive growth. The goal is protection. Protection from devaluation, protection from inflation, protection from unexpected economic shocks. Dollar funds typically return 4% to 8% in USD. That might look small, but once the Naira weakens, your returns in Naira become very powerful. This is the fund for people who want dollar safety without the stress of buying physical dollars. If your income is in Naira and you want to a hedge against FX volatility, this particular fund is your shield. The major thing you need to understand is that each fund has a purpose, each fund has a personality, and the fastest way to lose money is to choose the wrong one. So now that you understand the 5 different personalities of Stanbic Mutual Fund, the real question is, how do I move from knowing the fund to actually making money? Well, it starts with one simple word: consistency. Most Nigerians believe you need to drop a massive lump of money to start investing in mutual fund. That is a lie from the pit of hell. That is like, you don't need millions to start. You just need discipline. Mutual fund love consistency. They compound very well when you top them up monthly. Your investment journey is not about your starting amount. It's about your habits. And that's why I try my possible best to hold those that work with me as clients accountable, because consistency, like I said, is key. If you want to work with me, there's a link in the description and pinned comment to schedule a call. Then we can work together in building wealth together next year. So that's just by the way. If you're a beginner or student, you want to start with small amounts, maybe 10,000 naira to 50,000 naira monthly. If you're an intermediate earner, you want to increase the commitments to 50,000 to 250,000 naira monthly. If you're a high income earner, you want to use skill, maybe 250,000 naira to 2 million naira in mutual funds. You don't need big money to begin, like I said, you just need discipline. So guys, now that you have the strategy, let's jump into how to invest in the Stanbic IBTC mutual fund. First step you want to take is to visit the link on your screen or click on the link in the description and pinned comment. You can as well download the application on the Play Store, but I've not really found it seamless trying to use their app, as it keeps frustrating me. So if you want a seamless way to sign up, use the link in the description and pinned comment, or simply just visit their website and sign up. So once you click on that link, you land on this page where you can either log in or sign up. So you click on login. I already have an account I just created, so just log in. So once you create your account newly or you sign in, you land on this page, right? So this is a brand new account. So what you want to do is to complete your account setup. So you click on complete your account setup, put in your BVN, and then also you have put in your BVN. You also need to do your identity review, right? Then the next thing for you is to tell them about yourself. Using your bank details. I'll encourage you not to use all these microfinance bank, all these digital bank. Use your main bank account. So when you click on submit, you just be patient and wait. So you can see my request was submitted successfully. You can now click on continue. So once you have submitted your KYC, you can come to here that says mutual funds, and then you can see the different mutual funds that Stanbic IBTC have, right? You can even view the fund analysis. If you click on view fund analysis, you'll be able to see how the fund has performed, right? So you can see in the last 30 days, this money market fund has returned minus 4.06%. So you can see short term is not really doing well lately, but on the long run, it has really done amazing well, comparing to the money market fund, right? If you go back, you can see the indicative yield is around 16%, right? And coming over to the dollar fund, you can see the investment risk is moderate. You can see this one, money market fund, is low, but dollar fund is quite moderate. You can see the enhanced fixed income fund, moderate as well, right? If you want to invest in any of these funds, all you have to just do is click on here that says buy, and then you can either top up an existing account. That's if you have an existing mutual fund account with this money market fund. Sorry, with this money market fund here, you can either top up or you can create a new account. I don't have an account, so I click on create. Then I click on next, and then select this. Click on next. It give you a description of the product. I understand. Click on next. You now put in how much you want to invest. You can see the minimum investment for this product is 5,000 naira. So you put in 5,000 naira, right? Then click on next. You ask how do you want to pay. Click on this and then click on next. So you can see they say I have insufficient money in my wallet. So for me to be able to use that to invest, I have to fund my wallet with 5,000 naira. So all I have to do is copy this account, go to whatever account, it could be your OP, whatever account you want to use to fund this, fund the money, and then once the money reflects on your Stanbic IBTC, you should be able to now create an account and invest in this money market fund. The same thing applies to other funds that are here on their platform. I hope this video makes a lot of sense to you. It's also worth knowing that with all the safety these mutual fund offers, you can actually lose money. And the single biggest reason Nigerians lose money in mutual funds is a lack of strategy, which leads to emotional mistakes. They enter during the hype, withdraw during panic. They see a post on social media saying equity mutual fund have returned 500%, 50%, 45% in the last 1 year. And they don't want people to start running to the equity mutual fund. And 3 months later, when the market corrects, the balance drops by 10% or even 50%, they start panic selling. You need to understand that this kills compounding. They also expect the wrong fund to win. They put their retirement money into the money market fund where the 18% return is eaten alive by inflation when it hits 30%. They feel safe, but they are losing purchasing power every single day. Another reason that leads to losing money is mixing funds randomly. You just click and subscribe to 4 different funds without checking what assets they hold, leading to a confusing and an inefficient portfolio. But don't worry, I'm going to save you today. If you want to win, you must stop guessing and start following a clear goal-based strategy. Now, this is the exact breakdown of how you should use these 5 funds to match your 3 core financial goals. If you want safety and liquidity, which is the defense strategy, your goal here is short-term preservation, particularly if you're looking for where to put your emergency savings, save your rent or tuition within the next 12 months. For this goal, use the Stanbic Money Market Fund and the Stanbic Dollar Fund. Now, this is why it works. The MMF gives you instant access to your Naira for daily emergencies. The Dollar Fund protects a portion of that cash from Naira devaluation, so you are purely defensive. Now, if you are looking at optimizing for long-term growth, which is the wealth strategy, like retirement or a child education in the next 5 to 10 or even 18 years, well, you want to stabilize with the balanced fund and the equity fund. Always add the dollar fund for currency risk protection. This combination maximizes growth through the equity fund, but gives you a stable cushion through the bonds in the balanced fund. The dollar fund ensures that a global crisis doesn't wipe out your local gains. This strategy rewards patience and time. Now, if your goal is to create regular cash flow from your portfolio, like a landlord collecting rent, now here is most likely how your portfolio should look like. You want to use the bond fund. You can also combine it with a dividend paying stock portfolio and the balanced fund. Now, here is why this works. The bond fund is designed to generate consistent income from interest payments. Income-focused investors should never sit in the money market fund forever because MMF income is too low to live on. The bond fund gives you the better yield and stability you need. Now, lest I forget, before you click subscribe on any fund, you must master this final rule: checking the fund fact sheet. This is your Bible. It tells you the actual return, the specific assets the fund holds, the risk level, and the manager's fee. Always check it. If a fund manager cannot show you their fact sheet, do not give them your money. I've left a link that you can use to check the fact sheet for Stanbic IBTC in the pinned comment and description. Now let's talk about the practical side of things, the part most investors completely ignore until something goes wrong. Because opening a fund and investing is easy, but managing it properly is where the real result comes from. Let's start with how to track your returns. Most people check their mutual fund balance and think that number tells them everything, but your balance alone doesn't tell you whether you are truly making money. The real thing you should monitor is your unit price. When you invest in a mutual fund, you are not just dropping money there. You are buying units, and those units have a price that moves up or down based on the fund's performance. So your true growth comes from two things: the number of units you own and the price of those units. Tracking your return simply means checking, has my unit price gone up compared to when I bought it? If the answer is yes, you are growing. So instead of checking your total balance every morning, check your unit price over time. That tells you the real story. Now, what about withdrawing? A lot of people withdraw wrongly and end up killing their compounding without even knowing. Here's the truth, guys. A mutual fund rewards you for staying invested. The longer your units sit inside the fund, the more growth compounds. So if you need money, withdraw only what you need, not everything. Because the moment you cash out completely, you break your compounding cycle and you may even sell your units at a bad price. Here's the mindset I want to leave with you. I want you to withdraw with intention, not emotion. Let your unit keep working for you. Take only what is necessary and leave the rest to grow. If you have learned something valuable today, smash the like button so more Nigerians can gain clarity around this topic. Tell me in the comment section which Stanbic funds are you choosing or which one are you currently invested into. If you haven't subscribed to the channel, please do subscribe because I break down finance in the way most creators don't. And if you want to see the investment I'm making in real time or you want updates on the market, join my WhatsApp channel using the link in the description and pinned comment. For your one-on-one section, there's also a link in the description and pinned comments. Thank you for watching. Don't forget to stay sharp, stay safe, and like always, invest wisely. Deal.